Hello, everyone. Welcome back to the Canadian Real Estate Homefront podcast, where we talk about probably the most trending news that we can find across the internet on Canadian real estate. So that's our niche here. My name is Cortez Ranieri.
And I'm Brooke Hicks.
And we are, as always, super excited to kind of talk about real estate. That's what we do for a living.
Mm-hmm.
And yeah, this podcast is definitely just for educational purposes for you guys to hopefully help you make better decisions in your real estate purchasing process.
As per our opinion.
Yeah. Not financial advice.
Yeah, love it. Okay.
All right, let's get into topic number one. So there's been a lot of talk, and I've listened to a lot of podcasts about pre-construction and it kind of coming back to life. So I actually was listening to a podcast with a guy. His name's Jordan Skrinko. I might have butchered it, but he's like the pre-con guy. Like he like owned precondo.ca or something like that.
Okay.
And he also like just sells pre-con.
Okay.
Yeah. So he doesn't really do resale. So he's just a pre-con guy. And he was talking about how the 905 has all of a sudden become this like crazy place where pre-con's going nuts, but Toronto, it's dead. So he was talking about
interesting
rental prices and home prices. So since you're the queen of Hamilton, I wanted to ask you, how is pre-con doing in Hamilton and why is it doing so well?
See, that's the thing. There's a bunch of projects in Hamilton that aren't selling. And then there's some that are selling out really quickly.
Right.
So it's, I think, project to project. And I think a lot of people are only looking at price per square foot as oh my God, this is a good project. But I like to look at it way more of like an overall analysis per project. I think that prices have come down a little bit, and then Hamilton price per square foot compared to Toronto price per square foot, everyone's just trying to get a good deal right now.
Yeah.
Interest rates are high, right? Everyone just wants the best deal. So whatever price tag looks the best for the largest amount or the biggest floor plan, essentially, in people's minds, that's, I guess, where they think they're getting the best deal.
Yeah, for sure. I think so too. He was talking about how Toronto is priced at like $1,600 a square foot, and Hamilton's priced at like $1,000 a square foot or something like that. So if you're looking at it from like a rental standpoint, and in Hamilton, I don't know, I guess what does a one bedroom go for Hamilton? Like $2,200 a month, 21?
$2,200 a month.
I mean, a brand new condo might kind of attract a price like that.
Yeah, a brand new condo for sure. Like I rent one bedroom condos that are in older buildings for about $2,000. But then a brand new one, you maybe even get a little bit more if it's a nice building with good amenities. So the rental prices are high. So in terms of an investment, I do think pre-construction is a good deal. I've always thought that, even though it's gotten a very bad rap
lately for sure. Yeah.
Couple years, or, ever since, builders have pulled out, since materials had gone up and
prices kind of went crazy versus what you could buy for resale.
Exactly. So that's the thing too, right? It's like, why are you choosing to invest in pre-construction? Well, what's the goal? Because you can get a resale for the same price kind of anywhere. In Toronto, you can get a resale for a better price, even one that's just built. So new, essentially.
Yeah.
In Hamilton, so what's, your goal? Is it to invest and like use pre-construction as an add-on to build your portfolio? I mean, if you think about it too, like he was talking about Toronto, and some of what the pre-construction projects were charging was $1,600 a square foot. And then you compare that to Hamilton at $1,000 a square foot. Yeah.
And then you assume that, say a rental in Hamilton is $2,100.
Yeah.
And then you say that a rental in Toronto is, $2,300 to $2,400.
Yeah.
So you're not that far off.
Right.
Plus you're also going to bank on, because you're buying pre-con, you're going to bank on like say a 3% appreciation in rent. That might even be low, but say you're running low numbers. That Hamilton project, that closes in 2026, 27 actually kind of looks pretty lucrative.
Yeah.
But I think Toronto is that kind of blue chip, like it's solid, and Hamilton has a bit more risk right now, but the reward is a lot higher.
Right.
Would you agree with that?
I like to analyze pre-construction with three different like tools. So your cash flow, so what we can expect in rent if we do 3% per year and by the time it's built. Appreciation over the years. So usually people like to use a 6%, right? That's pretty conservative.
Pretty conservative.
In my opinion.
Yeah.
and then, your cash on cash return. So, what's an interesting thing is people will buy pre-construction, and however much they put down on their investment, or their purchase, and say they buy $1 million condo and it goes up to 1.1. Well, you've only invested $200K, and most builders require you to put 20% down over those 3 to 4 years, however long the term is. And they think, I've made 10% on my money. Well, essentially you've actually made 50% on your money, because you're only in it for $200,000 at the time of closing. You hadn't carried a mortgage during that time, and now it's up $100K.
Yeah.
So that, I think, is a bigger strategy to look for, rather than where am I going to get the most cash flow, because if you're comparing Toronto prices and then the rent prices, it's going to be a difference of $300 to $400. Long-term appreciation, the downtown Toronto core versus, some tower going up in Hamilton that has good rents, but not much else going around there.
Yeah.
I don't know if that's the play, but yes, better price per square foot. People think it's more affordable for sure.
Yeah.
But cash flow, I think, is just one small aspect to the whole analysis tool on what makes a project good to invest in my eyes.
Yeah.
Right? But if we're looking at just cash flow, you're going to likely see better monthly return than if you're obviously paying a lot more in Toronto, if your plan is just to rent it.
I think location is key too, which a lot of people don't really focus on. Like actually like going and driving and see where the project is, because people love to be around people and love to be around like a good atmosphere. Like you think of neighborhoods in Toronto too, like King West, like, young people love to be in King West. There's probably always going to be a demand to live in King West or,
because it's not only about the rental prices now and then adding 3% per year until the time it's built, because by the time it's built, there's going to be a lot of people leasing out those units. So in Hamilton, in wherever subsection that a building with a good price per square foot is going up, when all of those units come for lease, how long is it going to take to fill? Like, there's so much more to look at.
Yeah.
Whereas downtown Toronto and King West, yes, you're going to pay more, but, resale is also going to likely be better. Likely will fill up quicker if there's 30 units that come to the market for lease.
Yeah.
It's just quicker.
It's just going to be quicker. Yeah.
It's going to be quicker.
More demand for the Toronto units versus the Hamilton units in terms of rentals, I would think.
And Hamilton has gone up pretty significantly year over year, aside from, the big crash we just saw. But Toronto was averaging about 9 to 10%, a little bit higher, obviously.
Yeah.
Toronto will likely.
Yeah, well, especially post-pandemic, it had a crazy boom.
Yeah. So I think Hamilton is doing well with well, so is Oakville too. So people are just kind of feeling more comfortable, I think it is.
Yeah.
To put it back into pre-construction. But even though I'm a huge believer in pre-construction, I'll be the first to say, like, price per square foot is not what you should.
It's not the be-all, end-all.
It's not.
Yeah.
I'd rather pay more in a location that I believe in is going further, that isn't going to be tough to sell. There was a bunch of condos going up along the QEW, past Stony Creek, heading into Grimsby or St. Catharines, and price per square foot was awesome, right? But then resale, how much is it? Has it gone up?
Yeah.
What's going on in that neighborhood that's going to push prices?
Yeah.
Right? So, yes, okay, I can rent it and essentially be cash flow neutral or cash flow positive, but my return on my initial down payment, that whatever, make numbers easy, $200K, am I going to make that 50% return on my money, or am I going to make a lot less, but hopefully have that $200 cash flow? Yeah,
that's true. And you know what else is really interesting? We had a speaker kind of come in from RBC, and basically what he was saying, because you know how all these people are closing on these condos and they can't afford it because the rates went up and it's not appraising.
Yeah.
So if you lock in with RBC, they will, it doesn't really matter now because the rate's a lot higher. But back then, if you went to them and said, I'll get a mortgage from you, they would have given you the rate at that time and the appraisal at that time. So even if it closed later on, they would basically they were willing to take the risk, is what he said. They would honor what they said.
I remember that.
Isn't that crazy?
It's called a firm approval.
Firm approval, yeah.
So I had a buyer that was buying in the Grimsby new condos by the water, and he wouldn't do it without a firm approval. And I'm like, builders don't need a firm approval. You just need a pre-approval.
Yeah.
And it blew my mind that here is what we're going to give you no matter what happens.
Yeah.
At the time of closing. It was called
Which
firm
is
approval.
Which is crazy to think, because RBC is Canada's biggest bank in terms of market cap and just business that they do. So if this bank is willing to take that kind of risk on the Canadian real estate market, it kind of, not to be bullish, but it's like, wow, they're definitely bullish on the Canadian real estate market long term.
Interesting. I'm very bullish on the Canadian market.
You don't say.
Look at the main investment vehicles to wealth in Canada. Okay. Well, there's real estate investing.
Yeah.
Stocks.
Building
a business.
Building a business. Yeah.
Those are the three main ones, right? And why I love real estate so much is the power of leverage. Like going back to, if you made $100K on your initial 20% down, you're effectively leveraged 5-to-1 on that $1 million purchase.
Yeah.
Right? I mean, you can lever up in the stock market, but that has way more risk, because the minute the market heads against you, there's margin calls.
You get margin called, you can get liquidated. Yeah.
Right. And then building a business in Canada, it's not like the government's handing out a bunch of money to get you started up. So
Yeah.
I think that, like, that's why I'm bullish with real estate. If you do your homework and you know what you're buying, I think real estate investing is the best way to long-term wealth.
And I think this kind of goes into our next topic really well, actually. So basically, we're just talking about pre-construction, obviously, but here's a headline here. Most of Canadian real estate investors are boomers, according to Stats Canada. So Statistics Canada study found that the residential real estate investors are at least 55 years old. Looking at property registry data for 5 provinces, the largest share of investors were in Nova Scotia.
What? Wait, back up.
Yeah.
The largest share of investors were in Nova Scotia?
They were in Nova Scotia. And then New Brunswick. And the other provinces weren't too far behind. So BC, Manitoba, and Ontario weren't too far behind. So Nova Scotia had 66%, and Ontario was the lowest at 57% of the provinces that I named. So boomers held nearly 1/3 of residential owned investment properties in these provinces.
Huh.
Isn't that crazy to think? So, but then you actually just take a quick step back and you're like, but is it really that crazy? Because you have these people who built such mass wealth. Like there's a lot of Canadians who are very, very wealthy.
Yeah.
And then they just go, okay, I'm going to buy a property for an investment vehicle, for my son, for my daughter, for my future.
Exactly.
And then this is what happens, right? They just start collecting all these properties.
No, it makes sense. And I heard 90% of all millionaires in Canada have become so through real estate.
Yeah.
And that's just, people that bought 10, 20 years ago. You've kind of built yourself into a millionaire if you have a detached property in a major city, for sure.
I know a lot of realtors and mortgage agents and even real estate lawyers who own multiple properties. So it was it wasn't like this is a shock to anyone, really, if you think about it. It's just a lot of people who, see real estate as this really kind of safe investment vehicle, and they've been right.
Yeah, that's interesting. Well, I mean, back to leverage too, is that if you have a mortgage-free property, and most people that baby boomers, most of them will have a mortgage-free property at this point, if they bought a long time ago, can use the power of leverage. Run a HELOC on your house, carrying a small amount of debt, paying off that HELOC to then put it in another property, putting it in something that they can have a tenant in until their son or daughter is of age and wants to move in. Yeah. So it does make sense, but I wouldn't have thought that.
Yeah. This article also kind of goes on, speaking of you said leverage there, so it kind of made me jump it back in this article, but demographic makeup can have a significant impact on home prices. Greater leverage translates into higher home prices. More leverage results in higher home prices, as well as greater competition for homes. Canada's largest bank, RBC, notably warned that investors are replacing first-time buyers. Yeah. And then here.
It's almost like once you have one, I'm telling you, it's easier to get more. I'll make a personal example. I bought a condo 2 weeks ago. Just the price was so good. It was an assignment. And I'm like, I'm just going to do this. Leveraged one of my properties to get a very quick essentially loan mortgage
Yeah.
to close on that, and I'm going to flip it.
Yeah.
Right. If I didn't have these properties that have tenants, not to say there's a ton of equity, I only bought them a year, 2 years, 3 years ago, but kind of leveraging assets to buy more. And
they freed up cash for you.
Right. Just put a second mortgage on my house, give me this, I'm going to flip this condo and then take the second mortgage off my house.
Yeah.
So once you have one, sit on it for a little bit, don't go crazy. But like I did.
Like you did, yeah.
But I mean, it can pay off. But you have to really kind of know where you're going and navigate it well, because people can get into trouble. But once you have one, it's easy to keep going.
Yeah. And then just to finish up their last point here that I liked, it was normalization of leveraging existing properties when upgrading is also problematic. It holds back more affordable units from the market, making affordable inventory more scarce. It's like pulling up the stairs as you climb up the property ladder, so no one else can follow you. Less inventory while competing with more investors for the same number of units.
Yeah.
Crazy.
Interesting. I also heard too, though, that a lot of investors are selling off their properties too, just with the high mortgage rates.
Yeah, with the variable rates.
Right. So I'm thinking, like, as much as I believe that stat, like baby boomers who are retired, and a lot of them are, who were thinking, okay, well, I'm going to put a HELOC or a second mortgage on my house and buy this investment property. That that rate was very low. So, I'm retired, I can afford, this $300 a month or whatever it is.
Yeah.
Then that skyrockets up. And then all of a sudden their mortgage on their investment, which they used the HELOC for, skyrockets up. They're no longer cash flowing and they're retired.
Yeah.
So I was hearing that a lot of investors were going to come to market
even if they do come to market, which probably some of them have, it's probably just getting absorbed because the amount of new listings is at like a 20-year low. Like we're down 35-40% in terms of new inventory year over year.
Yeah.
It's like, where's that going? It's going to someone else who's willing to pay for it. So yeah, even if you are underwater, I feel like right now you're still pretty safe because there's so little inventory that you're probably one of the only houses on the street for sale.
The only thing that would make somebody still underwater right now is somebody that, let's say, bought last year in March, February, on a variable rate. They're coming up to renewal, okay, and they have to renew at the new rates, and they are so severely cash flow negative. But if they sold, they'd sell at a loss because even though there's low inventory, we're not back to those prices. So those people essentially...
Yeah, we've talked about that. We've talked about that before because it's just such a small amount of the market.
Yeah.
People put too much emphasis on that. And yeah, we've had that conversation before. Like we aren't seeing it. Like I'm not seeing it. You're not seeing it. No. Yeah. But even then, like even if you are feeling pain, like the banks are still working with you. So like, are they probably working with some of these investors who are at a negative loans of value? Like probably.
Yeah. I mean, there's like boots on the ground in Hamilton. There's a lot of listings. I have a couple that are not flying off the shelf. I mean, we're getting showings, right?
It's slowing down. At least in our market.
I used to celebrate with listings last year.
Even earlier this year, there's a big difference.
Yeah, there's a lot of listings. It was like 2 weeks ago. I was like, oh my gosh, was it freaking list your house week?
Yeah.
And I told my client that because, I go back and forth between the strategy of bidding war or list for face value and kind of let it ride.
Yeah.
Right. And I'm still putting in not like I never did, but the staging, the effort, like this listing needs to be
stunning.
Good,
yeah.
Right. Whereas last year didn't matter.
Yeah.
Right. Because there was such low inventory. So I don't see it as everything's flying off the shelf. I just think, the good ones sell. Back to their old saying.
Yeah, I know. Even with inflation coming in higher than expected, a friend called me today and said, "What do you think? Do you think Tiff Macklin will raise the rates one more time?"
No.
Your team, no.
Are you team yes? Are you team yes?
No, I need more data.
No, you don't need more data.
I need more
right
data.
Now, May 26th. Is it the 26th?
Yeah.
Yeah.
I think one more 25 basis points.
No way.
Yeah.
Okay, we're gonna have a bet.
But that could change. It could change. If inflation if inflation is bad as it was, month over month, yeah, I think he pretty much has to. 25 basis points. I'm not saying 50. I'm not saying one.
No, he's holding.
Okay.
He's holding.
We'll see. We'll see. That's for sure. Okay. On to our next topic here. Canadian mortgage borrowers to see payments rise 20%, Bank of Canada. So the Bank of Canada actually talked a lot after that inflation reading.
Mm-hmm.
They had like some points. They're trying to cool the market down and make everyone chill out, because most of that CPI came from mortgage interest. Yeah. So he's obviously trying to like say, hey, we're going to pause, the next 2 pauses, we'll see that number come down to where we want it to be. So
it doesn't happen overnight too.
No.
So that's interesting, because we're just talking about, it was like list your house week, and buyers are kind of like, So I don't know if it's waiting for June. The first week of June is the next Bank of Canada reading, I think.
Yeah, something like that.
Reading,
Yeah.
To see if they're going to raise rates or not. Because again, what brings out buyers is economic certainty, not certainty.
Not uncertainty, but certainty. Yeah.
But when they feel safe, right, and nothing's going to be swayed or affected. So even if somebody's looking at a fixed mortgage, I think that if they feel confident in the market and, I don't want to buy now because what if the rate gets increased again, then prices are going to come down, and everyone's just trying to time it. So that could be why this week and last week things have been a little bit slower because of the inflation reading.
Well, the bond yield is going up and they're pricing in a rate hike. So a lot of mortgage brokers were saying, this was on Twitter, they were saying this is a week ago, they said lock in your rate today, because rates are going to go up based on what the bond market is pricing in.
But the bond market was pricing in a rate decrease by July when the bank failures happened in the States.
For sure.
So I don't know if I trust the bond market. It's all just traders that are pricing.
Yeah, Yeah. They basically use the data they have in front of them.
Exactly.
Yeah. So with inflation going up now they're pricing in a hike. But before they were pricing in that the market might break.
Yeah.
Because these banks were failing. But like I said, it's yesterday's news almost, isn't it?
No.
I thought it was going to be,
in your rate.
I thought it was going to be a way bigger deal than it was.
It's funny because I've always been with B lenders, always, for mortgages.
Brooke. You're so risk adverse.
Risk adverse?
Risk on, whatever you want to call it. Yeah. You'd make me sweat.
Hey, no. So I was with B lender and I was all mad that I got a 2.7 rate instead of a 1.5 or whatever. And then fast forward the year and I'm like, you should have gone with B lender. But I've always been with B lender. So I've never actually experienced the variable kind of ups and downs other than on my HELOC. But
do you lock in? Like you have a fixed?
B lenders don't allow you to go variable unless they give you a HELOC that's prime plus 2 or something.
Okay.
So I've always been on a fixed rate.
Interesting.
Yeah.
Cool.
Always. It's just okay. But I only ever do 1 year.
Okay.
I only ever do fixed 1 year.
So what happens now at that 2% you had?
Oh, it's up. It's gone up, but I'm now, fixed 1 year.
Fixed 1 year.
Fixed 1 year. I will never lock in for more than a year.
Yeah.
Because the market changes so drastically sometimes. I want to be able to get out of that mortgage. I want to be able to refinance. I am freaking having movability.
Right. You don't want to lock in. You don't want a lender that's a 5 year because you like to be.
No. I want to pull out the minute I have a ton of equity that is coming to me.
Right.
Right?
Yeah.
And I'm using that leverage to buy another one.
Not financial advice.
It's paid off so far.
Yeah, I know. You haven't been wrong so far. So back to this article. Okay. Canada's central bank sees mortgage causing some economic risks for the country. Borrowers are looking at significantly higher payments after rate normalization. By 2026, nearly all mortgage holders will have seen their payments increase. Both fixed and variable rate mortgage payments will have climbed by the end of 2026. The median payment is expected to be 20% higher than a February of 2022 before the rate hikes. They estimate that the average fixed rate borrower will see payments between 20 to 25% during this period. It's crazy, eh? Renewals. Okay, one more here. If the original repayment timelines are maintained, the central bank estimates payments will have climbed closer to 40% for fixed rate borrowers.
If their original amortization schedule was maintained.
Yeah. So when they I guess what they're saying here is they locked in at the bottom, pretty much at the bottom of the market. By the time in 2026 comes up, because a lot of people say it's 2021.
Right.
A lot of people take the most popular mortgage product is that 5 year fixed rate. Mm-hmm. They're saying that if they kept the same amortization schedule and they didn't have an extension,
Yeah.
then they're looking at about 40% higher. So if you have $1,000 right now, it's going to be 1,400. Did I get that math right? I think so.
Interesting. So I wonder how much principal has been paid down in that 4 years.
Yeah, in 5 years. I guess it depends on what home you bought. Like if you bought a home and that's 350,000, you're probably not feeling too much of a sticker shock. But if you bought 1.5 million and you leveraged yourself to the roof, you'll be feeling more pain.
Yeah. Hopefully by then you have a lot of equity
Mm-hmm.
to play with.
Yeah. Well, they did say they're going to work with people, so they've done it already. They're going to do it again.
Interesting. Well, our stress test, right, was introduced, and everyone's like, "Oh, stress test! I hate stress test." And they go through the stress test, and they get stress tested to that rate and that payment.
Yeah.
And essentially, if you didn't pass the stress test, you weren't pre-approved.
Yeah.
Right. So essentially, that stress test protected a lot of borrowers, right?
Yeah.
Because if you didn't pass it, then you weren't pre-approved. Because hey, if the rates go up, you're not going to be able to afford your house. You're going to have to do whatever it is.
Well, it did protect people until this little funny thing came along called mortgage fraud.
Yeah.
That is craziness. But I actually was literally talking to someone and they were trying to get a house. And it was one of those holding offer ones.
Yeah.
And someone told them that they should fake their income to basically get more equity. Like they knew somebody. So they knew somebody who would fake their income so they would qualify it more.
Yeah.
So they could afford that townhouse.
Yeah.
And I was like, you give me that person's name, I'm going to send them right to jail.
Oh my God, that's so funny. I've heard that too.
I hate that. Yeah, anyways, I think just to wrap this topic up, I think that renewals will be something where I think people are going to feel some hurt and some pain, but also I think a lot of people are preparing for it. People aren't stupid.
Pain right now.
People aren't stupid. They're watching the news. They're thinking, okay, we need to cut back in certain places and make sure we're ready for this. I've actually heard people message their mortgage broker and be like, what am I looking at? Like, what's my payment going to be? Like, I just need to know because I cannot, even though it's 2 years from now, I need to know what I'm going to have to pay. So
even though it's 2 years from now.
It's hard to obviously tell, but you know you're not going to be at that 1% anymore. So like, you know, you pick a conservative figure and maybe in the 3s or something and you go from there.
Huh.
Yeah. And variable rate holders, God bless you. Hopefully it comes down soon.
Would you go variable right now?
No, because it's higher than the fixed.
Okay.
So I'd rather lock in for
a
couple of years.
A couple.
Yeah. It might come down, but look where we are right now.
My dad's friend came to me. He was like, I have my mortgage rate right now. I'm on variable 6 point something. I just got offered a 3-year term for 5.65. And I was like, do not do it. And they're like, I'm like, do not do it. But
3 years?
Yeah. I'm like, do not do it. Do not do it. And I don't know if they did or not, but like,
well, it's interesting. I mean,
think you're going to pay for.
Look where we are right now, though. Like, there's no rate decrease in sight, I don't think. Like, we just had inflation higher. Like, early next year. Like, we're in June. And inflation is still at 4.4%. House prices are ripping again. We're behind the state's overnight rate. So do you really think in January we're going to see a drop?
Yes.
Well, at least we disagree.
I also don't think that they're raising again. I just think inflation, you know, yes, it went up last month, but there's other factors to it, right? Again, back to the interest.
Yeah.
You know, it takes time and we've been on the decline unless we see like month over month inflation going back up, which I don't think it is. It's not like everyone's on a rampage spending right now. People know what's going on. Things are expensive. I think it's slowly coming down. The rates, I don't think will stay this high for that long. And if you look at historical, you know, crashes too, how long did they stay high? And whatever high was at that time, I know it was much higher, but house prices were a lot cheaper.
A lot cheaper, yeah. The Paul Volcker time.
Yeah, it was a year and a half until things kind of.
Yeah, actually not sure off the top of my head, but
yeah,
I think it was a couple of years because inflation came roaring back. in their time, which is what we don't want to see. But hopefully we learn from history.
Yeah.
Yeah.
Well, I guess see.
Well, yeah, we'll see. Like we're almost in June here, so we're gonna have the TREB numbers come out soon too, which will be good. I would love to kind of get a gauge on months of inventory and see if that's creeping up as we're kind of talking about the market slowing. Yeah. And we're heading into summer. So historically, summer is a slower time for real estate.
Yeah.
A lot of people go on vacation and their kids are at home and their just minds are in other places. So
if we pulled the reading right now, I would say we're in a balanced market.
Yeah. That's what you're feeling.
Shoot me. I do. I see good listings selling with multiple offers. I see really good listings that, like, why isn't this selling? Like, what's going on?
Yeah.
And then I usually know which one of my listings are going to fly off the shelf, but then sometimes I'm a little bit shocked, and that happens in a buyer or a balanced market.
Yeah.
There's a lot of listings in Hamilton. Yes, they're moving, days on market. Yeah. But if we looked at amount of listings and amount of transactions and kind of pulled that output number, I bet you we'd be in a balanced market, and we'll see in a week.
We'll see. Yeah. We'll see. And numbers don't always equate to sentiment, if that makes sense, right? Yes, like I think that it's always good to kind of, not get lost in the data and kind of talk to other agents and see what's going on in their listings and see what they're feeling too, because
I do think every time we are approaching a Bank of Canada meeting, I think it's like a little bit like what's going on just because of everything that's happened this year. It's funny. So this new condo that I just bought, planning to literally flip it within 1 week, just close on it, resell it. So I'm at the point where I'm like, do I sell it before the Bank of Canada meeting or do I wait? So it's like, it's a little bit risky, right?
Yeah.
So do I wait? And then it's like, he doesn't raise, then it's like, okay, go time. He didn't raise, celebrate bidding war. Or do I put it up before? So I'm like debating that right now.
This
is currently on my plate.
Yeah. You sound like this. You sound like a seller that's a headache. Trying to time the market. Like you're the seller. Like, yeah. That's funny.
That's so funny.
All right. Our last topic here. We're going to wrap it up. The best places to live in Canada. People always love these ones. And they always roast us.
Yes.
But this is not our best places to live. This was from studyfinds.org. And we're going to go over the list here. So coming in at number 1 was Ottawa, Ontario. So perhaps unsurprisingly, Canada's capital city makes for a great place to call home. The city consistently ranks highly for quality of life, cleanliness, and is one of the best communities to live in worldwide, which isn't a shock because Ottawa, it's a big city. They employ so many people. Like that job is gold if you get it.
What is this based on? Because I lived in Ottawa.
I don't know. It just talks about
I don't know.
It's kind of like it's the article for people who want to move to Canada. So they give you the.
Okay. So I was like, okay, well, most of these cities have the most amount of people, so they're interviewing Canada. By default, they
you'll be surprised as we go down the rankings here. Also, Ottawa's real estate. I'm not saying it's cheap, but it's a lot cheaper than Toronto and Vancouver.
Okay, so these are people that want to move to Canada, are just like researching where they want to live.
Exactly.
Do they know how cold it is in Ottawa?
Out of all of Canada.
I guess.
It's miserable. It's miserable
Ottawa's
6 months.
Winters are not.
I heard they're brutal. Yeah,
pleasant.
They're brutal. Toronto's actually aren't that bad.
Toronto's winters are not bad.
It's more like January, February, a little bit of March.
Ottawa's winters?
Yeah. Brutal, eh?
Brace yourself.
Number 2, Quebec City, Quebec.
Okay.
Often regarded for its European-like feel, Quebec City is beloved by tourists and residents alike. Quebec City is one of the most prestigious and best cities to live in Canada.
Okay, I support that one.
Quebec City is more affordable than most Canadian major cities. This city has an affordability cost of living with many study and job opportunities, which is great for international students moving to Canada. I also recently read that Quebec is trying to, how the Liberals have this crazy immigration policy where they want to bring in so many people. Quebec is saying we'll only let X amount of those people into our province. So they're kind of like pushing back and saying, we need to slow this train down. So just a quick little tidbit for people.
I like Quebec City.
Yeah.
I'm a big fan.
It's cool. It's fun there. Yeah.
Quebec City's awesome.
They kind of nailed it with that European-like feel because it does have that European-like feel.
It does. The what do you call that? Cobblestone everywhere.
Yeah, it's beautiful. A lot of the streets are walkable. And
it's
cool.
Awesome.
All right, number 3, not really surprised right now, is Calgary, Alberta. With its impressive skyline and nearby access to Banff National Park, Calgary offers the best of both worlds. Calgary is a bustling city that is always full of life, but always largely connected to nature and surrounding landscapes. Even in the years of widespread economic downturn, Calgary has remained a fairly stable economy and job market. Calgary often receives praise for its stability of its economy, but this particularly rang true in its economic recovery coming out of the pandemic.
I don't mind Calgary. Okay.
People are moving there. Yeah.
Yeah. Don't hate it.
Calgary almost became a buzzword in Canada. Like how many people are moving there? Calgary and Alberta.
I know.
Number 4, Vancouver, British Columbia, a popular city for television and filmmakers. Vancouver is beautiful as it is exciting.
Awesome.
It is beautiful. So from beautiful sandy beaches and stunning sea views to soaring mountains with hiking trails and snow sports to enjoy.
Like a poem.
I know.
Whoa.
It is a thriving modern city on the doorstep of some of the most stunning scenery in the country.
Yeah.
Which is true. They don't talk about real estate here. They don't talk about the affordability. They don't talk about the opioid crisis that they're facing. But
we like to know what this
in terms of the beauty of Vancouver, the weather is actually really great there. I know it rains a lot, but the weather there's not a lot of snow there, which is obviously a big bonus for a lot of people. Totally. Number 5. Are you ready for this one?
I'm ready.
Oakville, Ontario. It's weird because I think Oakville is not a city because it's obviously the town of Oakville.
You know what they said? It's not a city. And the mayor basically just said it will never
be a city.
Never be a city. It will always be a town. And we're trying to keep that village-like feel.
Yeah, yeah.
So they essentially said, we're never calling it a city. It's
the
town of Oakville.
Yeah. So it's here. So we can obviously speak to Oakville, but Oakville residents enjoy both the slower pace and comfort of suburban life and the convenience access to the vibrant city of Toronto. Oakville is just 30 minutes from downtown Toronto and an hour's escape to Niagara Falls and the United States border, which is true.
It is true.
It's close to the water.
Yeah.
You know, it's beautiful. It's safe. It is a great place to live, but it is so expensive. So if you're coming here and you want to live in Oakville, you have to be prepared to have the money to live in Oakville. Yeah. Because I think what's the average price for a detached home in Oakville? Anywhere from 1.5 to 1.6. I think in the pandemic it was 1.7 plus.
Something like that.
And I'm not talking about an insane home. I'm talking about like a cookie cutter home.
Yeah.
So it is a beautiful town. I guess we can call it a city in this view, but it is definitely expensive.
My heart will always be in Oakville.
Yeah, yeah.
I'm a little bit biased, but I lived in three of those 5 cities.
Where'd you live?
So I lived in Ottawa, going to Carleton. Very, very cold. I have nothing much more to say about that. Then Vancouver.
You live in Vancouver? I didn't know that.
Well, just outside, and then worked along that coast for, I guess, 8 months. So not a huge amount of time, but mostly during the warmer weather. Love Vancouver.
Yeah.
That would be my second
Dream.
Choice. Yeah, I would love to live in Vancouver. My business wasn't here.
Yeah.
And obviously I live in Oakville now.
Yeah.
Interesting.
Yeah. A couple cool topics here. That's all I had. You got anything else?
No.
All right.
That's all for me.
I'll wrap it up here. If you are on YouTube, please like and subscribe to the channel. We are constantly growing, which is so cool to see. If you want more short form content, if this is just too long for you, you can check out our TikTok and Instagram. Instagram, we're approaching 5,000 followers, which is really cool.
People are like, you bought those followers. And I'm like,
I know they're saying we bought stuff. Yeah, those are all from me posting.
He does all the posting and I just watch it grow. I'm like, did you see that?
So cool. And then if you are on Spotify or Apple Music, please also leave us a review. It just helps push this content out to more people. And it makes us want to keep doing it. So even with all the hateful comments, we still have some awesome ones that drowned out the hateful ones.
So funny. I love it. Keep it going.
Yeah. I mean, at this point, I'm just numb to it. So it's like,
it's funny.
Yeah. I don't even like care anymore what people say about me. So
me neither. No.
That's funny. Anyways, thanks so much for watching, and we'll be back.
Guys.
We'll be back next week.
Yes.
All right. Take care.
Bye.